Hey everybody, welcome to the Big Show, the Everything Money Big Show. Tuesdays, what day is it? Tuesdays at 1 p.m. We see you all over the world. We see all of our OG homies, all of the Patreon members. We welcome you in. As always, your handsome and debonair host, Seth. Paul is here today. Paul, welcome, as always.
Guys, my goal in life is to get a blue check. Mo's goal in life is to get a blue check. Seth's goal in life is to get a blue check. Please follow us on Instagram. Paul Gabriel, Trader Mo, Seth Gerchanin. My Instagram is purely personal stuff. I rarely post anything business. If I do anything, it's an article here or there on my story, but it's all purely personal. It's fun. I had my golf event with my father on Friday. He won because he cheats. And he actually didn't cheat. He actually won straight up. But either way,
we welcome in Mo. Mo is here today. Mo in your little pink outfit. Look at that little beautiful pink outfit.
Why is he ignoring me?
We have a great show today. As with every live stream, we are taking $50 donations to a good cause. If you want an individual stock for us to look at with our 8-pillar system.
No banks. No utilities. No energy.
No REITs.
No insurance. No REITs. That sounds like a lot. It's really not a lot. If you go weed out all those people, we don't look at those. If you get the $50 and ask for those, I don't know what to tell you. Sorry.
We do shout out to that Bitnast Nation. If you're trading with Mo, which I am as a part of the Employed Trader Series, Mo got me into some trades last week. And we were just consulting on them prior to the show. So if you're in the Bitnast, we love you as always. And Mo, how is the morning show going? If you're new to the channel, Mo goes live every morning at 9 a.m. Mo, tell the folks, the fans, the lovers out there what you do in the morning.
Going good. So we picked the top news of the day and we run through it. And this week has been a little bit slow, but tomorrow is when the news, well, I guess Thursday is really when the news is going to heat up because we're going to figure out what the Fed is going to do. And then that's going to move things this and that way. So, of course, let's see what happens this week.
Llewellyn is wishing us a happy one-day early anniversary. Now,
hello,
this is probably this is when we switched, Paul, from like the more of a podcast form to doing stocks. Might have been the first time I asked you, like, what exactly do you look at when you do a stock? But that's what we're here doing today, guys.
Llewellyn was the 5th
patron of all time.
Patron of all time.
Llewellyn is an OG homie and top 10 for sure. We love you guys. Okay. Today, again, we are taking donations. And if you guys want an individual stock, it'll be $50. Paul, what is the donation? Mo, what is the donation?
Yeah, ask Mo, because I don't know what it is.
It's National Alliance of Mental Illness in Brevard County in South Florida. NAMI Brevard, so they are helping all of those with mental illness. I mean, it's a big problem in this country. People are homeless in jail, and maybe they shouldn't be. So that's where all the money's going this week, and that's down in South Florida.
And that makes sense. A lot of nuts down there in Florida, so I can see where they're.
Florida is America's basement.
Yep, there you go. Okay, so here we go.
One of its fastest growing basements in the world.
Paul, if you want to pull up the Everything Money software for me, we're going to get into our first stock while we wait for some donations to fly in. We do have a little bit of an agenda today, folks, and we're going to get through some of these.
Oh, that's why you were cutting me off rudely?
Just a smidge.
Our software, how much is our software? 80 cents a day?
Our software for the Patreon. Can you blow that up a little bigger, Paul, before we get going?
God, I really don't like it when it's big, Seth.
I know. That's what she said. Okay.
I'm more about the emotion of the ocean.
The first stock we're going to look at, the ticker symbol is Wish, Paul. Wish.
Oh, this is the company that has the logo on the Lakers jersey.
Oh, yeah,
really?
That's right. Right. Now, if you're watching this later, let me be very clear, folks.
ContextLogic?
That's correct.
Oh, they were like brand new.
Maybe it's not them then.
The ticker symbol is Wish.
December 18th.
I'm sorry, maybe it's not Wish, but we definitely want to look at Wish today. This has been asked a zillion times. So let me be very clear, folks. We do zero due diligence on this company. As you've just seen, Paul has no clue what this is. The point is, with 10,000 companies, we want to use our 8 pillars as an initial screener to say, are we interested in this company? Should we go look at what they do, what they produce, what they're doing? Look at the 10K. All of this goes after it has to meet a certain criteria for us. And that criteria is typically not hype YouTubers just hyping up a stock price. So in this case, let's get after...
Who picked the stock?
Someone on our Patreon picked the stock. They wanted to look at it, Paul.
All right.
Go ahead.
Does anyone want to time me on the 1 minute mark? See if I can get this thing done?
Sure.
$7 billion market cap, 2.14 in revenue, negative $800 million in profit. They lose money. No other data. They hate making money. Income statement. 1 year of income statement. 2.15 billion, 821. So there's nothing to report there. Balance sheet. 1.93 billion versus 1.07 in all liabilities. Awesome. Check mark there. Cash flow statement. They have negative $400 million in free cash flow, 8 pillars, not enough data. Sick. Did I finish the minute mark?
Not really, but very obvious. We don't need to get anywhere near.
I'm not even looking at this, guys. Here's the deal. I want everybody to understand something. Will I miss out on the next Tesla? Will I miss out on the next Amazon? Will I miss out on the next Microsoft? 1,000,000%. And guess what? I'm okay with that. My goal, and I'm not saying it's the right thing for you, but for me, what I'm trying to teach is fundamental investing. In order to talk about fundamental investing, I need fundamentals. There are no fundamentals here. There's 1 year of data. I'm sure there's multiple quarters of data, but these stocks don't interest me. IPOs don't interest me because I feel like I'm looking at those and betting on an if come, right? If this happens, this could happen. To me, I want to find boring, stable companies that I can value. When I say stable, I still value growth very much. Our stock analyzer tool, as you'll see on the stream, values growth immensely. It's the very first line. What is your revenue growth estimate? So these are the things I want to discuss. For the patron who asked for it, I apologize. Go do that stuff. So go look at the Everything Money app when you're doing it, when you're requesting it, and make sure there's 5 years of data. You need at least 3 or 4 years, but for the data to work, you need 5 years of data for the pillars to pop up. Again, it's not to poo-poo on anything. It's just saying my brain works that way. Doesn't mean that I'm right. Andreessen is a VC guy. His brain works a totally different way. Peter Thiel's brain works a totally different way. My brain works on looking at cash flow, looking at revenue, looking at a balance sheet, looking at a cash flow statement, and seeing a story play out. And then how does that story lead to the future? That's the way my brain works. It's not a knock on anybody else's process as long as your process is defined and consistent.
We can move on. C Murder just gave $50 to donation a donation this week, and he wants to look at ComCast, Paul. ComCast.
Oh, this will be exciting.
The ticker symbol is CMCSA. Is that correct, Paul? CMCSA. Yep. ComCast is an American telecommunications conglomerate headquartered in Philadelphia, founded in 1963, and they have many subsidiaries: NBC Universal, Comcast Business, NBC, Xfinity, yada yada yada.
What's the radio station at NBC?
WNBC. WNBC. All right, this is Comcast.
Okay, guys, much easier for me to look at. $260 billion market cap, a PE of 22, so it's an X right now, and 11% profit margin, check there. Very high gross margin, what's expected, because if you think about it, every extra subscription they sell probably doesn't cost them much money at all. Probably costs them, subscription rights and things like that. 1.6% dividend yield, which pays out $4.3 billion a year. So again, with dividends, guys, one of the things we really harp here is don't look at a dividend and think it's safe. A lot of people believe that. The first meeting I ever had with a real estate lawyer, he bragged to me about buying GM stock for the dividend. And I remember saying to him, but is it safe? He's like, well, they're paying it. Okay. But if they can't afford it, they can borrow money to pay it to entice investors in. So what we're going to do is we're going to look at the free cash flow statement and see if that dividend yield can be supported by free cash flow. So 1X and 1 check so far, Uncle Seth.
Okay. Pillar number 3 is revenue growth over the past 5 years, not 15.
82 billion to 104, check mark. Now, one thing I'll say, these are cable companies. They make acquisitions all the time. I want to see how much of this growth is internal and how much organic growth and how much of that's from acquisitions. Because obviously, you don't want to value acquisition growth as much.
Okay. Pillar number 4 is profit growth.
9.12. 11.7, check mark there. So definite growth there.
How about shares outstanding, which is pillar number 5?
All right. 4.75 billion down to 4.59, another check mark. Not a ton of buyback, but it's better than issuing more shares.
How about pillar number 6, which is current assets over current liabilities?
Current assets about 30 billion. Current liabilities it's still a negative. It's an X, but it's barely an X.
Why do we look at current assets over liabilities, Paul?
We want to we're going to change this metric, by the way, to a more debt to revenue or debt to EBITDA or debt to market, something ratio like that. But right now, I used to look at it and say, do they even have enough cash on hand to pay their current bills? That seemed to me like but about 1/3 of companies don't. It all depends on the industry you're in, but I kind of think to myself, if you don't have enough cash to pay the bills they're due, how are you going to exist? But over time, I've changed my methodology on that one, and this will reflect that in the 8 pillars. So there you go.
Pillar number 7 is free cash flow growth, one of the most important pillars. And go ahead, Paul.
9 billion, 15 billion, check mark. 9, 10, 14, 12, 15. Definite check mark there with an average of 11.6. Let's call it 12 billion. Well, 11.6 times 20 is 23.2. Am I right here?
200?
230. That's what I mean. 230 billion. Is that what it is? What's 11.6 times 20? 23.2.
Yeah.
232 billion.
Yeah, that's correct. 232.
Okay, why was my brain farting there? 232 billion, and the market cap was 260.
Yeah, 260 is the actual market cap. So we use the free cash flow. Our pillar number 8 is we use the free cash flow and multiply it times this multiple of pillar number 8, usually around 20, to find our desired market cap.
And that was an X, by the way, because it was over 20.
Oh, it's over. Yeah, because so the actual market cap of 260 is a higher multiple than 20, which is an X for pillar number 8.
Now remember, Tim, are you going to stand there? Now remember, in the last 5 years, it's gone up considerably. I mean, look at this, Seth. Going back 10 years ago, it was 8.9 billion. Now it's 15. So the reason we put 20 in there is there growth in the last 5 years? Obviously, you have to weight it heavier, because if you take 15 times 20, you're at 300 billion. So according to that, it's selling for under 20 times last year's free cash flow. And I would say if you expect future growth that's considerable, I would argue that, okay, maybe there's, and we're going to put it in the stock analyzer tool here after Mo goes through his chart on ComCast. But right now it is an X on the last multiple, but really what matters is what's the growth of the company, so you can factor that into their model and see if you're overpaying or underpaying.
So the person who ordered this up, C Murder, he says that he can get this for 15% cheaper, and I'm not seeing in the chat why he can do that.
Does he work there?
Maybe he works there.
Yeah, that's what I was thinking. Someone else is saying maybe it's an ESPP plan, whatever that is.
Yeah.
So C Murder keeps on saying I can get this for 15% off.
Be careful with that, because if you do get that, you can't necessarily get the stock from the company and then flip it right away. It's like an IPO. Everybody thinks that they're going to go and buy shares of an IPO before they go public. And then instantly when the stock price comes up, they just dump everything. It doesn't work that way. You're locked into some kind of period. So
I see. Okay.
Make sure you know what you're doing first, if that's your plan.
Oh yeah, people are saying, okay, got it. Shared purchase plan. Got it, guys. Mo, are people trading ComCast over there?
Looking back to like November, it kind of had this little gap up, and then it's really just been stuck in this area, especially this area, for the past, 3 months or so. So right now, it's just going sideways on our stochastic. So until we get this red line moving up and making a new all-time high, I'm probably not doing anything with this. You need to start making all-time highs with this ComCast before you start getting into it again. So this one's not much doing with this one.
No bueno for ComCast.
No bueno.
Paul, do you want to show what you... Wow, look at this, Paul. Look at this.
Stock analyzer tool, guys. This is the next big feature for our software. It's on our dev site. It's going to be different than this. We're actually going to offer 3 different levels of assumptions. That way you can have a base case, a middle case, and a best case scenario for your assumptions. It'll pop up a price for all 3. I don't want it to just be, this is the price and that's it. You have to give a range of ideas. So look at this. I put in ComCast. Here's the revenue growth. In the last 1 year, down 4%, but over 5 years, it's 6% a year. Over 10 years, 6.59. So it's decreasing, but I would exclude this year. I'm not going to assume this. I'm going to assume this has something to do with COVID. Now, ComCast is a big company, Seth. So what am I going to put in for revenue growth? I'm probably going to put in 3%. Okay? Shares. They issued shares last year, but previously they were buying shares back. I'm going to conservatively call it they're buying back 1% a year. Net present value. This is what return do you want on your investment, okay? The market does about 10%, so I'm going to put 10% in there. I'm going to sell this at a 15 PE in the future, because historically, especially for large companies with slower growth, you should pay about what the market is, about 15%. Profit margin. So look at the profit margin here. They've gotten between 11 and 14%. So let's go to 12% here. Let's go 12.5. Free cash flow as a percentage of revenue. Again, I'm going to put about 12.5% in here because I did it over the last 5 and 10 years. Multiple free cash flow, also 15. How many years of data do I want? Let's go 7 years. So I hit the analyze button. Keep in mind, because these are the same and these are the same, their numbers, the values for the multiple of earnings and the multiple of free cash flow is going to be exactly the same. So it tells me in order to get a 10% return on my money on this company, I should pay $44.87 per share. And it's currently selling for $57.28 per share. Again, guys, this is only math. It is saying to get a 10% return on your money, if it sells for 15 times free cash flow and 15 times earnings, you need to pay $44.87. Just to show the difference. Let's say you know something better about the company. You read their 10K and you're like, you know what? They have revenue growth in this, and by the way, the revenue growth should be organic revenue growth, not through acquisitions. If they're able to grow their revenue by 5% a year, it changes the price from $44.70 to $50. If you want to do 5% per year and a future PE of 20 and a future free cash flow of 20, look, now $61, buy the stock. So I do this to show people it's just math. What assumptions are you making? If it's garbage in, it's garbage out. If it's good in, it's good out. Your job as an investor, in my opinion, is to be a value investor, which is put in reasonable assumptions that are not crazy and buy at a major discount. With ComCast, I don't think that's the case at this current price. Where would I buy ComCast as a value investor? Here's where I would buy ComCast as a value investor. I would buy it at somewhere south of $40. I'd be looking at puts there. So I look at it going, hey, it's about to me, it's pretty much worth $40 a share on the current market. Maybe 45. So I'd want to have it at sub 40. And if I want to buy it when it's close to, value investor wants to buy $1 for 50 cents. Not literally that, but they want to buy an asset at lower price than they think that it's worth. I think the company is worth $44 a share. So I probably want to buy it sub 35 or somewhere. At 40, I'm going to start taking a look at it. What do you guys think?
That's our take on ComCast, right, Paul?
Yep.
Again, we're taking donations. $50 donations get your stock or question of choice. The donations, Mo, one more time, the donations are going toward
National Alliance of Mental Illness in Brevard County in South Florida.
The next stock that Sneak88 wanted to look at, Paul, the ticker symbol is VRTX. This is Vertex.
This is
Pharmaceuticals. Yeah, biopharmaceutical company. It's based in Boston, one of the first biotech firms to use an explicit strategy of rational drug design rather than combinatorial chemistry. Dun, dun, dun.
And I want to make a comment here.
Go ahead.
That in July of 2020, it hit $295 a share, and it's now at $195.
July 2020?
Yep. July 2020. That was only 9-10 months ago, 11 months ago, and it's fallen now 30. So when people say to you, oh, that's not going to happen, it happens. So let's look at the company. Vertex.
Okay, Vertex Pharmaceuticals. This looks interesting, Paul.
$50 billion company, 18.3 PE, and a huge 43% margin. 2 check marks off the dribble. Wonderful, okay? No dividend yield, and a really high return on assets. They make a lot of money on their assets. Huge assets. So something to consider, but 2 check marks so far.
People are saying this might be a magic formula stock. Keep going, Paul.
Yeah, with that kind of return on assets, yeah, you might be right.
Pillar
revenue.
Number 3. Yep, go ahead.
2 billion, 6.4, check mark. Again, I want to make sure that it's not through acquisitions and it's through their own. Mo, do you know anything about this company? Did they?
Yeah, they do a lot of. I remember them now. They do a lot of stuff with cystic fibrosis.
Did they come out with drugs or these acquisitions?
Oh, I don't know about that.
We'll look at the cash flow statement later and see. I'll look. All right, net income, guys. 177 million to 2.7 billion.
Jeez.
Check mark there. Yeah, that's huge.
Check, please.
What do you think the shares outstanding are doing?
I think they're going up.
I think they're going up too.
Let's see. Pillar number 5 is shares. Oh, no. Did we skip 4?
No, I just did that net income.
3 and 4. Thank you. Pillar number 5 is shares outstanding.
They are up, not as much as I thought, though, Uncle Mo, Trader Mo. 246 to 260. So it's up about, what is that? 7%, 6%. Not a ton. Not great, but not a ton. Okay? So that's an X there on the shares outstanding. Balance sheet is going to be incredible. I bet you they have more cash on hand than total liabilities.
This is pillar number 6, y'all.
8.5 billion versus, I was right, 1.94, and their total liabilities is 3.1. So they have $5 billion in extra cash lying around.
Check, please.
5 billion extra lying around.
The market cap's 50 billion.
So it's 10% off.
Just based on a quick Google search, it looks like they do a lot of acquisitions.
Do they?
Yeah.
How about free cash flow for Vertex?
I'm not seeing another
Vertex.
cash flow statement, Mo.
Vertex.
They did one in
Pharmaceuticals.
2019 with
Maybe they did cash.
SEMA
Maybe
Therapeutics.
they did shares. I don't know.
Okay. Then they did
All right, ready? Free cash flow. And guys, again, like the most amazing software in the world that we are, we added the line for free cash flow. 461 to 3 billion.
Check, please.
Check mark with an average of 1.3. We'll get to that in 2 seconds. 1.3 times 20 is 26 billion. That is an X, right? However, technically by the 8 pillars, it's an X. But guys, I'm not giving this an average of 1.3. If I do my research on this company, and I feel like the future is going to keep growing, I cannot possibly put an average of 1.3. That's way too low because we're already at 3 billion last year. 3 billion last year times just 16 gets us to our $50 billion number. So I look at this as an example for all you haters out there who say I don't look deeper. This is an example of where I discount the past going, the past is useless if I think the future of the company is promising and I project growth to happen. Now, let's go put it in the stock analyzer tool after Mo does his analysis of the shares, but I will show you guys how the stock analyzer tool will tell you what to pay for the stock.
If you like the software behind Paul, you can get this software today as a member of our Patreon. The link is in the description below. 3,200 patrons, Paul. What a ride we've been on. Patrons, you know we love you and we appreciate your support. If you like this software, the stock analyzer tool is coming to you very soon, right, Paul? A time frame on the stock analyzer tool?
So original date was August 31st. It'll be sometime in July with a version for people to use.
And Tim, did you share some phone app, Everything Money phone app teasers this week as well? I just made that up, but that's how much I love you because I'm looking ahead, folks. Mo, are people trading Vertex Pharmaceuticals?
So this is an incredible chart. Look at this rise and fall and these gaps everywhere. So the reason I have this little whatever you call these things?
Lines.
Whiskers.
Okay.
This is showing like a support area for the stock, and you can see today. I'm going to zoom in right now. It has dropped below that support level with this gap down that happened yesterday. So this thing has a lot of room to fall. That's why I pulled out and showed that. So this made a great engulfment today. If you wanted to short this today, you absolutely could, and you are way down here on your stochastic. So I mean, this thing could. I mean, honestly, this could free fall. That's for sure. Is that?
Wow, really?
Yeah. I mean, there's no support down there. It seems like it's just bad news after bad news. All of that run-up was COVID. I don't know if they were was this March? Yeah. So from here to here was all COVID. I wonder if they were doing something with the COVID vaccine, and then maybe it fell apart right here.
Oh.
This is just I'm just guessing.
Yeah.
And then, I mean, you can just see the downward trajectory that they've had. This only makes sense because of COVID. Why would anything with cystic fibrosis be just booming during that time period? But
yes, we do.
You have a lot of room. But hold on, one more thing.
Sorry, Mo.
So this level right here, this is that support area. It dropped below that. So your next line is down here around $150 a share.
So it breaks through that, watch out below.
Actually, right now, watch out below. Because you got a great engulfing candlestick today, this one right here. You can really run this thing down pretty heavy.
Well, that's to 150, and then it breaks below 150, then watch out even further
If
below.
it drops below 150, there's really nothing that I can see down there at all. Really watch out.
Might as well declare bankruptcy?
Possible.
I'm kidding, I'm just kidding.
Zach is saying we do wear the same clothes. I demand these guys wear the same clothes every stream so we get the mics right.
Can I say something about that, Zach?
Every-
I have 20 of these and 20 white ones, and that's all I wear.
I brought this wonderful white new hoodie today, or the other day from
FinVolution,
and I really wanted to wear it today because it's kind of colder outside.
You're not allowed to.
Huh?
No white on the
I wasn't allowed to
show.
wear white on the show.
That's right. Paul, let's look at the stock analyzer tool for Vertex.
Okay, so guys, look at this revenue growth. 33% last year, 33.5 over the last 5 years. That's a per year number, and 15% over the next 10 years. I don't know what you're going to assume. Let's sit there and say it's 15%. Share buyback rate. They're issuing more shares. Let's assume that they issue 1% more per year. They've averaged 1.5 in the last 5, 2.7 in the last 10. Net present value. Now, to me, I want a higher return on my money because this is a stock that has a lot of fluctuations. It's probably riskier. So I want to get a higher return. I'm going to put 15% return on my money on this one. Future PE, but I'll put a higher future PE because of the fact that it can grow faster, et cetera. There's more potential. Cystic fibrosis, the medical world, I will put a higher PE in, which I don't really do very often. Margin, I'm going to put in 35% because the 20% of the last 10 years, 36% of the last 5 is trending up. Free cash flow as a percentage, I'm going to do about 40%. And then the cash flow free multiple, let's do this. Analyze it, 7 years of data, 20 times multiple free cash flow. It says to buy. So assuming these assumptions, it says 220 and 250 are my numbers. It's at 195 right now. So again, guys, am I telling you to buy? No. What I'm telling you to do is go do more research on the company. If you think my assumptions here are reasonable, it's a buy right now. You're going to make 15%. You're going to make over 15% return on your money over the next 7 years. If you think these assumptions are reasonable, everything is about the assumptions. I don't know these assumptions are reasonable. I went and looked at their data and said, oh, 15% revenue growth. They did 15% in the last 10 years. 1% shares per, not buyback. They're issuing 1% shares, more shares per year. So I am including the dilution of the shares as part of the analysis. All these things I'm doing here are now, let's sit here and change this PE. It's a more mature company. Let's change it to 15. Because in 7 years, it's more mature. Now it makes the share price 180 to 205. So on the high end, on the free cash flow basis, it's selling within the number. So it's still not far off, guys. It's still not far off. So again, this isn't me telling you go buy the stock. I will never, ever tell you to go buy a stock. What I'm telling you to do is go do more research, and if the assumptions we're making above are reasonable and you think they're actually credible assumptions, then yes, you should buy the stock right now.
That's our take on Vertex?
Why are you smiling?
This is long.
Can I thank some people?
Please do.
Michael, Wise Money Women, Ryan, Johnny, Bernard, Victor, and Brandon, and Justin, thank you for signing up in the last 45 minutes.
Someone's asking, have we done a video on the risks of SPAC acquisitions? Boy, those we have talked about how dangerous some of those are and how they've collapsed. I mean, I can't keep track of a lot of them, but basically if Stock Mo is talking about it, they're just all collapsing, including Lordstown, Charge. I don't know if Lordstown was one.
Yeah.
I don't know about ChargePoint, but there's definitely some EV stocks that are not doing well. And so Tim, can we spoil the news that may not happen, or what should we do about, Tim, what do you think?
You know what
Should I spoil the news about Lordstown, what we were thinking? What do you think, Tim? We had a plan. And it looks like it's falling through. Lordstown is inviting investors to their plant to speak with them about investing, check out operations, and then chaos ensued, Mo, this past week. And
the CEO and CFO quit.
Quitting, stepping down.
And by the way, Lordstown's only 45 minutes from here?
Yeah.
Yeah.
So Tim has been just trying to reach out to them to get us to go down hopefully we were going to be the only YouTube investing channel to go right to the source, the horse's mouth, and see what the hell's going on down there. But
I have 120 pesos in my pocket, about $6. I was going to go there and make an offer for the entire company. Yep. Crickets.
The wrong kick.
Did you see the Ford Bronco started coming out on yesterday?
Oh, the big one?
The big one.
I want that car.
You know, it's really sad. Everybody talks about this EV stuff. Nobody talks about how great that is. I mean, that's big for Ford.
Yeah.
First time since 1996.
Trapper gave a donation to
Trap King
Mo's foundation of choice this week. Now listen to this, Paul. This is a little confusing. Okay. Illness. So Trapper says, okay, so this is not a stock question. Might not be a MOW question. What does that mean? MOW? Mo question? I don't know. But do you see a crash coming? And would a put on a QQQ, which is an ETF, and a buy on KBWB, which is another ETF?
I don't know what KBWB is, but I do think if you think a crash is coming and imminent.
A KB, before you say that, that is an Invesco taxable municipal bond ETF.
Oh, I still want to understand what's in them, but I do think QQQ is going to fall harder than the S&P 500.
Okay.
Yeah, it will. It's run up faster than the S&P 500.
It's way more overvalued.
And it's going to run down faster than the S&P 500.
So they're saying, would you put a put on that and buy, or just do Bank of America or JP Morgan for interest rates rising? The question, my apologies, is all over the place. So do you understand it?
Yeah. If you want to bet on the market falling, instead of shorting, another idea is to buy puts. Buying puts super cheap because a lot of people think the market's going to keep going up. So I imagine there's a mispricing on out of the money on very low puts in the future. That's a very common strategy. If you're trying to time the market in a way, don't do it. Just stick with your ETFs, buy every month, and do that. But if you have some fun money, you want to put some puts in, just remember, while you wait for a crash, as those puts expire, you got to rebuy and keep doing it. It is cheaper than my S&P 500 short, though, for the record. So it's just, I would never advise people to get into that trading idea of trying to guess when the markets are going to fall. I have a different situation. I've got 8 or 9 businesses upstairs. I got a lot of real estate. I got EM. I got a lot of things going on where I don't have to be in the market all the time generating wealth for myself. I can be patient and wait for the right time for me as an investor. So buying puts, very, very deep puts at long-term or future dates, it still involves somewhat guessing when the crash could happen. Do I think a crash is going to happen? Yes. The more and more overvalued the market gets, the more likely there is to be a pop or a crash.
Well, a crash-proof company is this one, Paul. You're going to love this.
No such thing.
It's Aerotine International. They're a cutting-edge tech firm out of the Midwest. And if I could put you in at a 7 and take you out at a 32, you're telling me you wouldn't.
Did somebody say that, or did you pull it up for yourself?
Ian pulled that up. So
Aerotine, guys, for those who don't understand, is that
what did he say? From the upside of. What did he say?
Don't judge me on my losers. Judge me on my winner. Don't judge me on my winners. Judge me on my losers because there's so few
of them. That's Stock Mo. All right, guys.
That's a great movie.
Phenomenal movie.
So we will be running, Tim and I and our intern Nathan will be running the Tesla giveaway in a mere 2,000. So if you're a patron, we're going to put you in a list. We're going to run it. If you've been a patron a long time, you get more spots. We're going to run it. And we're trying to figure out the best way to get you guys your Tesla. So start picking out colors. Paul, what percentage of stocks versus ETFs should we have?
Who asked that question?
Matt. Some guy named Chess Goals.
Do you know who that is?
Of course. I was watching your videos yesterday, my friend. So
were you really?
I was watching chess video on something on some sort of opening he does. He likes the soiree.
The Queen's Gambit.
The swing opening.
No, he's a big fan. He did Kiro Khan is this
No, when he's black, he opens with this swing soiree thingy.
Yeah.
And he's
soiree, I don't think
that's what it's called. Yeah, for sure.
I always tell people it all depends on the situation. If you're saving for retirement, I would put 90% ETFs and 10% fund, figure out your own stocks. If you're trying to sit there and if you have way more money than you need and you're okay and you're very astute in investing and learning a process to this stuff, I'd be 100% stocks. That's what I am. I don't buy any ETFs. I don't buy any mutual funds. I'm 100%. When I do invest, it's 100% my own picks because I'm just confident enough to do that. But remember, there's a process to be learned here. And in the time being, you need to still save for your retirement and make sure it's being invested long-term, growing with the market. Buy low-cost ETFs, index funds. That way you can retire great anyhow and stick to that plan.
Paul, I have a large percentage of my portfolio in the little book that beats the market stocks, the Magic Formula stocks from Joel Greenblatt. I did this last July, so follow with us, patrons. I think we need to start. I think there's a little book Discord chat, but we're going to start. If you want to get with me on July 1st, we all buy our stocks together for the new year. At least for my investing year, that's what we can do. But Paul, here's my point: is I did little book stocks. Then I did stocks where I thumped it around and thought I knew I was better. And little books are slaying.
Right now, it's only short term. And I do think little book over long periods of time will slay, but I don't think it's something to gauge on the 1 year mark. Because if it had been down, if you'd said to me, Paul, it doesn't work, what would I said? I said, well, no, it does work. It just takes time and it depends on the market situation. Things like little book that beats the market will do better during okay markets and bad markets. During booming euphoric markets like we've had in the last 3 or 4 or 5 years, it will not do better. And I think that's been proven that it doesn't do better. But everybody else writes it off as, oh, it doesn't work. Well, value investing hasn't worked for the last 4 or 5 years either, but I'm still a value investor.
Jeroy's in England just donated to get you a new shirt. He just donated some money for that, so I appreciate that.
Well, I think it's wasted money there, Jeroy. I apologize. That's all. That's all going to the charity.
The next one is we're still waiting on donations, $50 donations. If you want to see a stock, Paul, let's take a look at Square. Square is
going to be fun.
By the way, Ian, you're right. 50% AMC, 50% GameStop, 100%. Diversification. Yep. Okay, Square. I have a little beef with Square.
Go ahead.
I've been reaching out to Square because we're trying to get ourselves off of Patreon and onto our own website. Square, I reached out to them. They called me within minutes. Let's do this. They said, we'll get you a quote by Wednesday of last week. I emailed them Thursday. Where's the quote? No answer. I emailed them again today. Where's the quote? No answer.
No good.
I'm a little peeved.
I'll tell you what, the racket these guys are pulling with the eBay, the PayPal, the Squares. I mean, I swipe a credit card for my clients and the amount of money they take. I mean, I know they're building a system and it's not possible. Boy, oh boy, it hurts sometimes to give them all that money. So here we go, Paul. This is Square.
Well, Square is 105 billion. Very reasonable PE of 293. That's an X. 2.72 profit margin. That's an X. No dividend yield because they have no money. All right, so far, 2 X's. I'm sure income statement's gonna look great. Revenue growth, wow, look at this, Seth. 1.79 to 13.2. And look at the growth in the last year. Yep. This is clear because like so much online buying in the last year. Do you see this?
Do you think that 13 is sustainable?
I would think almost tripling is probably not sustainable, especially because of a pandemic.
With some of your businesses, my apologies for cutting you off. With some of your businesses, I feel like once you start with some sort of payment system, I don't switch. I just say, you know what the hell, I've got the readers.
Well, it's not about that. It's about the fact that so many users have to go, they actually buy online. I'm not worried about people hiring Square.
Oh, I see.
This is because a lot of users probably had to buy online because they couldn't go to stores. Because they get a percentage of that revenue.
Of course.
Do you follow what I'm saying?
I do. I'm just saying how.
So now I think next year, I doubt it's going to be as good in terms of number of people buying.
I see.
Now, it could be a plateau. I don't know.
Okay, pillar number 4 is profit growth over the last couple of years. I'm sure it's exploded as well.
Well, they've lost 90 million to making 358. Check mark there.
Check, please.
Okay.
How about shares outstanding is pillar number 5?
Not surprised here. 366 million to 455, another X. They just issued a ton of shares, guys.
Oh boy.
You know, probably because a lot of growth. They're trying to make acquisitions, trying to hire people, give them stock options, etc. Balance sheet: 9 billion in current assets, 5.5 billion in current liabilities, and they have enough cash to pay off all their liabilities. Great work, guys.
That's pretty good. How about free cash flow growth?
Ooh boy.
What do you
Free cash flow: 56 down to 16. That's actually an X.
How could this happen, Paul?
There was probably something in the operating, because look at the operating cash flow. Went from 80 to 162, but from 550. So their revenue jumped up 3 times, but their free cash flow plummeted. An average of 200 million. 200 million times 20 is 4 billion. That's an X. So guys, this is a situation where I immediately look at it and go, next. Because I don't see anything in this that I've seen making me go, wait a second, this could be good. Because even though the revenue is increasing, I worry about the revenue sustainability. Is it going to drop from 13 billion? Even if it ends up being higher, it was still a year in which everybody bought online because they had to. So when everybody's done buying online because they had, now granted, you might sit there and make the argument, well, Paul, they're used to buying online, now they're going to continue to do so. Maybe so. But yesterday I was at lunch with my friend Michael Moskal, and we were at a restaurant we always go to through the pandemic. It was packed yesterday for the first time we've ever been. Packed. I looked at airline travel. Did you hear the airline travel numbers?
No, go ahead.
In 2019, I believe there's the numbers. On like 6/14 of 19, there were 2.6 million travelers that day. Last year, there was like 550,000. And this year, there were 2.1 million.
Just like that.
So we're almost back up to that level. So I look at it saying, okay, same thing with credit cards. If people are back to going in the store and you go to Dick's Sporting Goods, they're not using Square. You go to, all these things I look at going, is it possible people are going to keep their pattern of buying online for all those small? Yeah, it's possible. Is it probable? I don't know. So for that reason also, along with the valuation, I'm just not even buying this company. I'm going to wait.
Mo, I can see from here, if you're into Bidnass Nation, look at this Square chart. Now, I'm the employed trader, so I'm now a specialist. I have about 3 hours of trading under my belt, but look at these charts. I know where you're headed with this one. Go ahead.
So it's looking interesting for sure. I know, though, I just checked the other one. We're stuck right at our 100-day moving average. So you actually saw it bounce up a little bit today, and you have that little wick on top. That's a little pullback. So it's going to need a lot of volume to push through that 100-day moving average. I'll use green, like so. And let's just get this thing moving up into the sweet spot. And then you're going to contest with these resistance points. So most ideal situation, this thing just starts moving, gets over the 100-day moving average, doesn't have anything to deal with, starts making all-time highs, and goes on that way. Now, is that going to happen? I don't know. This Square, though, is a great stock to day trade. I know it's a little bit more expensive as far as cost per share goes, but the way that this is structured, it has a very high beta. It's volatile. What's it moved today? It's moving 1.5%. That's pretty typical. So you can go in there and trade Square on a 15-minute chart. This is a fun one to use in that regard.
And I do want to repeat, guys, a lot of people are commenting, well, Paul, my local barber, my local... Yes, my whole point about it, though, is I don't think Square... I think Square was very useful. I just sit there and say, I'm not sitting there saying Square doesn't have a lot of potential. They absolutely do. And I do think they're going to do very well in the small business front. Very much so. I believe Square is better than possibly Stripe. Stripe is better for developers, but Square is great for users. I'm just sitting there saying, to go from 5 billion to 13 billion because of a very specific reason, and that reason's now gone. I'm not saying that 5 years from now they're going to have higher revenue, but at the time being, are they going to take a drop? That's the question I ask. That's it. And because of the 290 times, and they had 13 billion in revenue, it still had lower free cash flow, and the cash flow was 16 million, and even their best cash flow number over the last 5 years still puts the company at freaking 200 times free cash flow.
Yeah.
I'm out.
Yeah.
It's that simple. It's like, listen, there'll be a better time to buy Square. Square might be a $200 billion company when I invest in it, but at that point, they're probably making over $10 billion a year in free cash flow. Mm-hmm. I'd rather invest in a $200 billion company making $12, $15 billion a year in free cash flow than a $100 billion company making $500 million in free cash flow, hoping it gets to the $200 billion mark. Mm-hmm. That's my philosophy. I will give somebody their worth once they've earned that.
CJ's saying, wouldn't you think that Apple could just crush this and take over and make if they wanted to? It seems like Apple could do anything they wanted.
They could definitely make a run.
If I'm Apple, I'm waiting for a crash. I'm waiting for Square to plummet, and I just acquire it. Because guess what? How much? I have $200 billion in cash sitting around, and if they fall by 70% in stock value, I can buy them for $30 billion.
And they have the infrastructure in place.
Yeah. But I would say this. How much is Apple being charged by Visa, MasterCard? Because there's like 30 companies in the world, 40 companies in the world that go directly, maybe it's more than that, go directly to Visa, MasterCard. They don't go to an intermediate person like Square or like local companies here. And they're getting amazing deals. That's people like Amazon, Walmart, Target, Apple, things like that. They're doing high volume.
So I do think that I think they're waiting for something like that with one of these payment companies. I also think they're going to make some kind of acquisition of one of these smaller EV companies just so they have the infrastructure in place there too.
Nicholas is asking, is sitting on cash wasting an opportunity or waiting for the right opportunity?
Great question, Nicholas. Nicholas?
It is. Studa.
Oh, Nick. Yeah, I've seen him name a lot in the chat. It depends what you're doing. Are you saving for retirement or is this extra money? If it's your retirement money, I just think it's a bad idea. I think you should take your cash, split it up into 12 to 24 payments, and every month for the next 12 to 24 months, buy into the market and know you're buying at high levels and lower levels. I just don't think for retirement you should be trying to time the market. I just think that's a bad idea. Now, if you're a very wealthy individual who has multiple streams of income, doesn't need to worry about that, different story altogether. But for most people who are watching our channel, they're people trying to save for retirement. I don't know. It'd be interesting to find out who the wealthiest patron is. The only one I know, one person who has a few $1 million.
Yeah, I think I know who you're talking about.
Yeah, that's it.
He's in Paul's Super Shorts?
Yes.
Yeah.
So I look at that saying, okay, and even that person, I wouldn't recommend that they.
Right.
I would recommend that they.
It's not that incredible amount of wealth.
just still. It's not FU money where if your money goes, it could still be a problem if you miss out on a big bull market.
Yep.
Dan is asking, so coming back to Square, what is your ridiculously low price you'd want to buy this stock at, Paul?
Oh, jeez. Okay. So let's put it in our stock analyzer tool. Square.
So last March, actually before COVID, this was an $83 stock. It's gone up triple since then.
Okay. What's the revenue growth number for Square? Let's call it 30% a year. They're issuing shares like crazy, 2% a year. Let's say we take a market value. Future PE, let's call it 20 to be aggressive. Profit margin, let's say the profit margin increases and goes to 6%, which we haven't seen in the last 10 years. Free cash flow as a percentage of revenue, again, 6, and price of free cash flow 20. How many years? 7 years. $120 a share. And that's assuming these are all correct. And what's it at right now?
227.
Yeah. So it's got to fall in half. And it's assuming, by the way, that these numbers are all accurate. I've never seen this. I've never seen this. And I'm still giving aggressive numbers for the multiple free cash flow and earnings. I've never seen this. And I haven't seen this either. I mean, there's a lot of assumptions here made, guys, that haven't been seen. I'm sitting there saying, okay, they're going to cool down on issuing shares. The profit margin is going to increase. All these things are happening. There's still assumptions being made here.
I'm still surprised by that cutting it in half number.
Yeah, I am too.
I thought it would be a lot lower.
Now, ready?
Yeah.
Let's look at our number.
Why don't we put in our assumption?
3%. I want 12% return. Future PE of 15. Profit margin of 5. 15. My number to even start looking at it, $68.
That sounds more reasonable.
Right?
Yeah.
$68. And they're issuing 2% more, 3% more shares per year. If they're issuing 0, they just stop issuing shares and just stay stable. It becomes $80.
Okay, here we go. March 18th. The low, $32.33.
Yeah, they skyrocketed.
Yeah. So don't say it can't happen.
Can't stop, won't stop.
Yee.
And by the way, that'll show what will happen with expensive companies like this during another downturn.
And yeah, the companies that do this on the way up are the companies that can do this right back on the way down. Very quickly.
All right, keep the requests coming, guys. If you want us to do one of your stocks, it's affiliate $50 donation to Mo's Foundation. Mo, tell us one more time what it is. Tell the new viewers what it is.
Yes, it's the National Alliance of Mental Illness in Brevard County. That's in South Florida. And they do great things down there.
There's a great question here by Dark Knight. Does that take into consideration margin of safety? The way I implement margin of safety is by increasing my NPV, my expected rate of return. If I want to have a big margin of safety, I'll sit there and say, okay, I want a 20% return. That's a way of shortcutting margin, because obviously the higher return you want, the lower price you pay. And that's one way. So if I want a 20% return, $52 is my price. So I sit there and say anything below $52, I'm probably buying the stock at. That's the way you input margin of safety into a discounted cash flow or multiple of earnings sheet. You increase your NPV. You increase your desired rate of return. I love this stock analyzer tool. This, guys, awesome. I'm telling you right now, this alone is worth the 80 cents. This alone itself is worth 80 cents a day. I believe that when this comes out, I can easily just charge 50% more for the software and you'd still be a screaming deal. That's how amazing this software is. So sign up for it now before you regret it, and before it's $50 whatever it's gonna be big. It's going up at least the first of the month. When the stock analyzer tool comes out, I might increase it even further. So don't be weak. Don't be 80 cents a freaking day, guys. Come on, grow up.
All right, guys, here we are. We're doing great. I was just reading some other YouTubers what they thought about Square.
Going to the moon.
Yep, absolutely. It's going to rise dramatically this year. It's going to rise, and of course, since they've said that, it's fallen. So, yes, and of course, based on nothing, they say this, of course. So, all right, let's see. Guys, I see the usual donations. We appreciate that, Susie Llewellyn. Thank you so much for the charity donation. As always, Paul, tease us one more time, like you know how to do, baby. On the stock analyzer tool, when can people expect this? Our new viewers who are watching now.
The stock analyzer tool will be in sometime in July. My original date was August 31st. So like usual, I under promise and over deliver it. It'll be here sometime in July. I'm working on a few things. One of which will be, instead of asking for one assumption, it's gonna put it all in a line and ask you for best case, worst case, best case, and worst case. Worst case, mid case, best case. That way you get 3 different values. And you don't have to just sit there and go, oh, it's only worth $120. No, you can sit there and say, listen, in your worst case, it's worth $100 a share. Your best case, your middle case is 120. Your best case is 140. That way you can get an idea of what instead of having to do 3 different analyses.
What's going on?
Finn, I've just been handed an urgent message by Tim, scribbled in chicken scratch. He'd like to look at the company. I love you, Tim. He'd like to look at this company. The ticker symbol, Paul, is FINV. FINV is a ticker, and this is FinVolution GR. Come on.
Group.
Love it. FinVolution GR. It's a Chinese company, Paul, founded in 2007. FinVolution.
Look at the stock, by the way. IPO'd at 13, got as low as $1.40 just a year ago, and now it's at $9. All right, so remember, guys, again, not to sound weird, but There is a concern about data coming out of China. So I'm going to assume everything here on out is on the up and up. There's no concerns about the numbers, et cetera. Okay. So $2.6 billion company, 7.7 PE, check mark, very high profit margin, 30%, check mark there. Dividend yield of 1.9%. They're paying about $50 million a year in dividends. So again, go to your free cash flow statement. We make it easy. Make sure that $50 million can easily be supported, or you go a few lines up. And last year they had $480 million in free cash flow. So they can easily afford that free cash flow. Very high return on assets over here. So there you go.
Beth Kirchanen has entered the chat. Okay, profit growth over the past 5 years.
Revenue growth.
My apologies. Revenue growth for FinVolution.
205, 918.
That's pretty good.
But wait a second. Look at this, Seth. 205, 590, 662, 597, 917. Go find out what happened here, guys. How did they go from tripling to 15% growth to drop to almost 100% growth? Another 60% growth. Profit, 137, 335, check mark there. Again, profit went up and then collapsed, so understand the story there. These are part of the stories I talk about. Look at a company's financials. It tells you a story. Go find the answers to the questions you have because of the story. Okay, shares outstanding. Oh boy, Uncle Seth.
Uh-oh, tell me, baby.
133 to 281, X marks. Now, do you want to hear the good news? It seems like it's been going down, though, since the year after. So it's an X still, but it's hopefully on its way down. Balance sheet. Total current assets, $2.1 billion. Total liabilities, $329. Oh, wow. Total current liabilities, $329. Total liabilities, $963. So, guys, this is a big game changer. Take $1 billion off their market cap. That takes out 40% of their market cap immediately. Because they have enough cash on hand to pay off all their debts and still have $1 billion left over. That takes off $1 billion from their market cap. They go from 2.6 to $1.6 billion. That's incredible.
Wow, that's huge.
That is huge. Ooh, free cash flow. This is weird.
Free cash flow.
I'm wondering if we're not getting the data right. 145 to 482. That's a check mark with an average of 250. That's a check mark as well. 250 times 20. Oh, so 250 times 20 is $5 billion. Okay, so based on this, it's a pretty obvious buy.
Yeah.
If you think they're at least going to stay the same in size, this is the great news about this company. If they just grow with inflation for the rest of the time, and their costs go up with inflation and their revenue goes up with inflation, if you buy them at this price, you are going to make a killing. Thank you very much for Depesh Patel. Thank you very much for signing up for our Patreon. And also thank you very much to N.A. Ramatal. I probably pronounced that wrong. So anyways, on this company, you're paying five times, 6 times free cash flow net. I mean, you can't lose money unless the company goes to zero, unless the company goes down. That's the only way you're going to lose money here. If it just stays the same and grows with inflation, you're going to make a killing. I don't even know. This is like a company like, what do you say here? It's just, okay, can you grow? Yes. Can you grow more than inflation? Yes. Great. Can you grow inflation? Great. Even if you buy it even if the revenue stays the same and costs just go up by inflation, you'll still make a killing on this company. You'll get your money back in 5 or 6 years. As long as the entire structure of the company stays the same and they keep doing this, no brainer. The question you have to ask is, what's going on with the company? Why do they have big fluctuations in revenue? Even though the revenue is up, they had fluctuations. It's same with profit, same with cash flow. Make sure the numbers are accurate.
1.8 dividend yield, 1.9 dividend, 1.9% dividend yield, and wow, lots of free cash sitting around. I'm sorry, current assets sitting around. Mo, are people trading?
I mean, it's making a very solid run, and it's going up to this all-time high peak. I mean, I'll draw this is where it got intraday, but it's getting to that level, and I mean, if you're in this, stay in it. It makes a lot of really great engulfing candlesticks day in and day out. Yesterday it had a good one. Today it tried. It bounced. No, it's overall that's major moving averages, I think. So you're in the clear in that regard.
How's volume on this company?
Volume's not bad. So it looks pretty bad down here. But I started highlighting it, and there's multiple millions of shares being traded per day. So I was thinking, like you were thinking, that it was going to be a very low volume stock, and I was going to say avoid it. But if you can just keep making green engulfing candlesticks going up, I don't see why not. Yeah, I don't see why not. It's not bad.
Okay, that is our take on this company we've never heard of, FinVolution
I've never heard of it.
GR out of China. Interesting. Paul, anything to tease our patrons and subscribers about merch?
Merch is I was thinking about merch this morning going, oh boy, we're still working on our deal with the company that's gonna provide our merch for us. It'll be a definite thought after 50,000 subscribers. We're working on the app for Everything Money, the phone app, everyone. This is gonna be an incredible app. We already have designs. It's pretty cool looking, so just stay tuned for the app. It'll probably be here sometime by the end of the year, but the app is gonna be awesome. It's gonna be very, very easy for you guys to use. It'll be at your fingertips. You don't have to get a laptop. You don't have to get it on a computer desktop. You can have it at your hands and be able to do stock analyzer tool, everything on it. So it's gonna be sweet.
Someone popped in and said that people are always looking at charts instead of looking at company futures. It's kind of a weird. We are. People do say this a lot. Paul is like.
What do you say?
We don't look at the future PEA, what the analysts say. We just look at the charts, and that we're dinosaurs. And that.
Oh, analysts? Let me tell you what you can do with an analyst estimation.
Hold on a minute now, because I mean,
I'm not going to hold on a minute.
I agree with Paul. Whatever he's going to say, I agree with.
Okay, go ahead.
Go find the biggest dumpster fire of all time. Okay. Take every analyst expectation of anything you hear or read, dump it in the fire. I've never looked at an analyst unless I know the analyst personally. I trust them. I've literally had morons tell me, I'm a stock analyst. I pitch billionaire stocks. Well, you're stupid. So that's not my fault. Analysts are misleading. They're biased. They have career risk. Do not listen to analysts. Do your own investigation. If you cannot, buy ETFs. That's it.
Okay, Paul.
We all want a Paul bobblehead. I want a Paul bobblehead. Yeah, exactly, Derek. And I remember, it's funny, Larry Ellison actually said this to the analysts in 2003. He said to them, or 2004, he's like, you guys think I'm dumb? You're the idiots who are giving buy ratings to stocks that had no revenue, no profit, and just were going public. That's exactly it. And he was in a tech world, and he's like, you guys think I'm dumb? You are the idiots all giving buy ratings. And it's all known that these analysts were getting, it's very well known that, and I go, again, this is part of bias, but there are stories of analysts selling ratings just to get a kid into a certain school or get a family trip somewhere or getting tickets to events. I mean, it happens all the time. Do your own analysis. Analysts are no smarter than you, and they have career risk. If they give the wrong, imagine me giving stock analysts, I'm giving projections right now. I'd be fired in 2 seconds. On this channel, I can sit there and explain my process. And analysts can't explain their process. They can be like, all they can do is give buy, strong buy, hold, sell, strong sell, and that's it. That's all they can do. They can't give their whole process. So asking somebody to just say buy or not buy, that's why, guys, you'll hear me say, people ask, hey, is it a buy or not? I'm not telling you that. I'm going to show you my process and let you decide. That's why the stock analyzer tool is here. I want you to put your own assumptions in based on your own research. I'm giving you guys the fishing pole and teaching you how to fish. I'm not just going to the water, getting the fish and throwing them at you. This is going to do way better for you guys long term. It's going to be more work, but you're going to be a lot smarter and a lot more confident because of it. Paul's on his horse again.
Yeah, they love that. Paul in the ivory tower, of course.
Paul and Mo, check WhatsApp. What did numbnuts say?
10 out of 10.
10 out of 10?
For you patrons only, this Friday, June 18th, at 6 p.m. Eastern, we do the fireside chat. It'll be me, Paul, and Mo together answering just the patrons' questions. The Patreon is growing. We're expecting a lot to see you there. So this Friday, everyone's invited. This is not a top tier. Everyone's invited this Friday to the fireside chat with the three of us. Yeah, keep going, Paul. What do you think?
I want to make sure we understand, like, I love the fact that there are people out there who appreciate it. And I also love the fact there are people out there who don't appreciate it. If what we're teaching is not for you, I'm okay with that. I'm not saying I'm right. I'm just telling you this is my process. But I will say I am right. If you start to talk about fundamentals, I look at fundamentals the right way. I'm not saying that fundamentals is the only way to put your money out there. But if it makes sense to you that $1 of cash flow today is worth more than $1 of cash flow in the future and going forward, and that if the cash flow increases, there are certain paying too much or paying too little, then we're on the same page. And I can provide a lot of value. If you don't, I'm fine with that. I don't understand charts. I don't like charts. I believe charts work, but they don't ring to me. I don't, whatever. They don't work for me. But Mo works for Mo very well. It's working for Seth. Not for me. Does that mean it's wrong? We have crypto chats. I don't believe in crypto, but if people out there are trading crypto, go do it. But don't come to me and say this crypto is better than another one because of blah, blah, blah. No, I don't want to talk about fundamentals here. At that point, we got to stop. Somebody was bragging about El Salvador taking, what was that? I think Tim said the thing.
El Salvador accepted the currency, and now like Mexico, Argentina, Brazil, all those places are doing it, and now it's like God's gift to earth. And who's the guy? Paul Tudor Jones, he endorsed it. Elon, and it's like, oh boy, right, here we go again.
More power. All I'm sitting there saying is, what makes the one cryptocurrency better than the other 4,500 or 5,000? Do I think crypto will be around? In some way, shape, or form, yes. But it's like internet companies. There were hundreds of internet companies that went public in 2000. Does that mean they're all going to make it? No. In fact, like all of them failed except for a few. My question is, which one's going to make it and why?
And in what form is it going to be in? And what rate? So there was an interesting story that I read this morning on the morning show that there are hedge funds across the board, more hedge funds than not, are saying that by 2026, cryptocurrency will be in their portfolios. And I said, okay, that makes perfect sense to me, because by 2026, the government will be involved in some capacity.
And by the way, at that point, is it crypto anymore?
It's not crypto anymore.
It's just a credit card.
But it's going to be called crypto.
Yeah, because they're going to appease
probably why hedge funds want to be in that in 2026 and not 2022 or 23. It's going to be a different form.
Yeah. So again, I'm okay if you don't like my style. I'm okay if you think I'm a blowhard. I'm okay with that. But my process has worked for me so far, and I'm trying to teach my process. And we only have 48,000 subscribers. If we have 500,000 who believe in my process, my goal is not to be, there's no subscriber goal. There used to be. The goal now is to provide the most education for people who go, that rings to me. Great. Just like marriage isn't for everybody. Doesn't mean I'm sitting here like telling you you can't get married. Just, it doesn't work for me. Okay, let's go on.
Well, speaking of marriage, Reed is saying, have we ever considered converting EM to a tax-free religious entity, Paul, to really start slaying it? We could just create our own religion here, the 8-pillar, based on the 8 pillars. We could save a boatload on Patreon fees.
So there was a gym. You know how they shut down gyms during COVID?
That's not legal, but go ahead.
You know they shut down gyms during COVID?
Yeah.
There was a gym, because a lot of people say like going to the gym is like church. They converted themselves into a church, and you can go there. And people were lifting, and they were like, well, we're just a church.
See, that's wrong, though. That's the thing. It's like that's a manipulation of a rule.
Just
that's
read some scripture.
That's pretty funny. That's pretty funny.
You would still lose that one. If they audited you, of course they would. They'd be like, so how much of this is scripture? 4 minutes. Yeah, you're out.
Okay, I'm just checking to see if that was plausible. Okay, guys, here we go. We have another donation here. We have another donation from Miguel Ortiz. Hi, guys. I've been watching your channel for about 3 weeks. Welcome, Miguel. And I love it. I'm also a member of the Patreon community. Congratulations. Could you guys do PBA? What is that, Paul?
PBA?
Yeah, PBA. PBA stock. The ticker symbol is PBA. Let's look it up. PBA stock.
Pembina Pipeline.
Oh, Pembina Pipeline.
Is that an oil company? Is that an energy company?
It's a Canadian corporation that operates transportation and storage infrastructure, delivering oil and natural gas to and from parts of Western Canada to natural gas.
I will look at it. It is attached to oil, which means that oil prices are higher. They're probably going to get more revenue, but we'll look at it still because it'll be more.
He said his average cost is $27.50, and he loves the monthly dividends. We appreciate your support.
It's a big dividend, kids.
Yep. Let's go after the ticker symbol is PBA. Pembina Pipeline, Canadian. Go ahead.
$18.3 billion market cap. No PE, no profit margin. So they lost money in the last year. 6.2% dividend yield, $1.14 billion. Go up to the top here. Last year they did $1.34 billion in free cash flow. So they pretty much ate up all their free cash flow with their dividend. I would not know if that's secure or not unless that's a historical thing where they just pay out a huge chunk of their profit for cash flow and dividend. Okay, now the other thing, big difference, $250 million loss in net income, $1.34 billion in free cash flow. There's a huge difference in cash flow and earnings here. So was there a write-off? Was there a temporary write-off? Was there a change in their free cash flow because of working capital that kind of affected it? Let's go look.
Pillar number 3 is revenue growth over the past 5 years.
Rev growth, 3.89, 5.41. Check mark there.
Profit growth, my friend.
Profit growth. 472 to a loss of 255. It's an X. But this loss, I will say this though, Seth. Look at this. Last 10 years, how many losses are there?
None.
1. and that was last year.
Yeah.
So I look at this guy's going, okay, I might just strike out this year. Let's see what the reason is. Let's see if there was a write-off somewhere up here. Let's see if Uncle Paul was right. Was there? Oh, look at that, guys. Uncle Paul was right. $1.38 billion write-off right there. Income and expenses were 1.38. So this is why we do this, guys, throughout last year. Go find out what that write-off for 1.38 billion is. They don't have many of them at big numbers. That's 2 years in a row of big ones. Other than that, they're pretty consistent. I'm not even looking at last year as I'm going to focus on the cash flow statement because that's going to be more indicative of their profit levels.
Should we go to shares outstanding, pillar number 5?
You know what? Instead of the
Yeah, go ahead.
Ooh.
Oh, we stole your heart. What's happening?
398 to 550. A big jump in these 2 years, probably an acquisition where they issued shares. Guys, they've been issuing shares like crazy since 2012. They're addicted to it. Over tripling the number of shares they have outstanding. They're diluting the heck out of their investors. But we'll put in our stock analyzer tool. We'll figure it out.
Okay. Current assets over liabilities is pillar number 6, Paul.
840 versus 1.25 billion. That's an X. Cash flow statement. Ready? Negative 780 to a 1.34. That's a check mark. Oh man, look at that all over the place. I'm going to take this. 353 times 20 is $7 billion. What's their market cap?
18 billion.
Yeah. So right now it's an X on that level. So let's go put it, after Mo looks at it, let's look at the 8 pillars section right here, guys. A lot of X's here. A lot of X's here. I mean, look at this shares outstanding. It's bad. Mo, take it away and I'll put this in the stock analyzer tool. We'll go from there.
So guys, it is a 50% stock. This thing fell like crazy back in the COVID time.
Yep.
But we've had a great run up. So we just remember this it's kind of broken through. Let me draw that line. Yeah, it's kind of surpassed that 50% area, but it's still going to have a lot of resistance coming into these 2 levels right here. So it's not completely out of the water, but it keeps going up. The trend is pretty nice. You're basically at the top of your stochastic. You're making nice engulfing candlesticks, trying to get back to that all-time high area. Not the worst thing in the world, but if you do something with this, make sure you're using stops because this thing can just start falling on you because there is that resistance that's still there. It's just not as strong as it once was.
How is the volume on this company as well?
That's a good question. Let's check it out. Today we have, so you're good call on this. 619 shares, 619,000 shares traded per day. It's consistently under 1 million or right at 1 million. So be careful with this one.
What number do you like?
I like companies.
I'm so surprised about the 1 million mark being the number. I mean, 1 million shares is a lot of shares.
I know it is, but if you really start looking at a lot of companies with less than 1 million, that's when you really start seeing a lot more gaps in prices. So,
really?
Yeah. 1 million is a pretty safe number. I mean, you could probably get away with like 700,
I trade Berkshire Hathaway Class A shares.
Well, so do I, but different reasons. I got a tracker share on that.
These fans, I mean, they got me dead to rights here. I like a baked potato. I put bacon bits on it, and Ian says I eat pineapple on my pizza like a boss. I put the.
What are you talking about?
Yeah, what are you talking about?
Read the comments. Seth eats pineapple on his pizza. He's right. I don't know how he knows that. I love you.
That's an insult.
Why?
People make fun of people who put pineapple on their pizzas.
Well then.
I think those are. Oh, never mind.
By the way, thank you, Sam, Juan, and Robert for signing up for the Patreon all in the last 13 minutes. People love it. Okay, so guys, we're going to look at the stock analyzer tool.
Please do.
And we're going to...
This is for PBA.
Now, PBA. Now, guys, this is hard for me because I'm going to make this a little bit bigger. I wish we could always do that.
There you go.
That's too big. So, guys, revenue growth. It's definitely decreasing. I'm not going to look at this as much. So, in the last 5 and 10 years, 15.76 to 8.6. Let's just be conservative and call it 6% revenue growth. Share buybacks. Okay, they're issuing shares like crazy. Let's just say they stay the same because they did last year. I don't know what's going to happen. I don't know if it's reasonable. I really don't know, guys. This is part of the issues with. This is why I want to make 3 different levels.
Folks are saying they wrote off $1 billion for a project.
I said that, 1.38 billion.
Oh, sorry about that. Thanks, Paul.
That's okay. And by the way, I wasn't saying it to you. I was saying it to the folks. Yeah, when we were looking at the income statement,
okay.
I looked up at the top and it said special income and charges 1.38 billion. And the thing I looked at, guys, is when you see those special income charges, make sure you look at the history over the last 10 years and see if it's a consistent thing they do. Because if they consistently are writing things off at big numbers, they're just really bad at investing, and you need to factor it in there as an expense, because a recurring expense always happening, a recurring one-time item becomes an all-the-time item. So with this company, I didn't see that. There was last year of 300 million, this previous year of 1.38, the previous year of 300 million, and then from there it was like very small numbers, and some were gains. So keep that in mind.
Keep going.
Future PE 15, profit margin about 10%. Future free cash flow, oh boy, call it 10%, another 15 PE. The number's gonna be the same. 7-year analysis, $17. That's assuming 0 share buybacks, and they're currently at
33, 34.
It's got to fall in half.
Yeah, boy.
Well, by the way, I still think that's high, because I did no issuing more of shares. I just look at this company going, and this is the thing about this is why I avoid energy and pipelines and things attached to energy and commodities. It's just so reliant on that commodities pricing. If all of a sudden oil tanks in pricing and people aren't, it's just all these things can happen. It just go over long periods of time when you look at these companies. What are you smiling about there, Tips?
Well, the pineapple discussion, no one gave it anything about what you were just talking about. They're all talking about pineapple on pizza. Kaspara says pineapple on pizza equals clapping when the plane lands. Just love it.
By the way, so whenever we do our fireside chat, I buy food for everybody. And one time I think we did pizza and you asked for pineapple, and I just like literally barfed in my mouth and then ordered your own pizza, because I was like, this is the word. I'm not going to put pineapple on a pizza.
Yeah, if you join us for the fireside chat, let me be very clear. All patrons are invited to the fireside chat this Friday, June 18th at 6 p.m. Eastern, where we go uncensored. We talk about a lot of things that not related, but we talk about business, we talk about the bid and ask, and we talk about personal stuff with us, a little more uncensored fun with the three of us. Thursdays at 2 p.m. is our top tier. That's the Bid and Ask Nation and above. Our top tier Patreon-only live stream. Paul has grand visions for you patrons moving forward, where we decrease our overall number of YouTube videos and drastically increase our number of Patreon-only videos, because we want to give you guys that cheddar.
It will go to refer to things. After we get out of Patreon, it's going to be referred to as the app. Our goal is to do one video a day on YouTube, and then at least one video a day only for the app, only for subscribers, because we want to build this for you guys and give you guys more content geared towards you. Obviously, our app is growing. We have over 3,200 members now. It's going very well, and we want it to get better and provide more and more value. Like I said, if it's not worth 80 cents per day, and remember, if you sign up today at 80 cents, in the future, your basis is 80 cents. If it ever goes up, it doesn't go up to the new level, it goes up like $1 for increasing costs. If it's $49 a level in the future, you're still at the $24 level, 80 cents a day, just going up from there. You're still stuck at your level, going up from your level. That's it. And it's only going up for costs of, operations and inflation and all that stuff. So, anyhow.
Right. That's our show for today, Paul.
Okay.
We welcome everyone in. We thank you for joining us. We see you on the Patreon. We'll see you in the Discord. Keep the video reaction suggestions coming. The video suggestions coming. I do read all those guys. Paul's popping in and out of the Discord as much as we can, guys. And Mo, the employed trader and the bid and ask, is giving you his tips and tricks, giving you his buys, and that's how we do.
No shorts check. I have boring khaki shorts on today. Guys, I'm moving right now. All my clothes are basically at my new house, and I stay at the house that Mo bought for me. And I have no clothes there. I got to go to the new house tonight and pick up some clothes. But I did buy some killer shorts recently, which I'll be wearing on the show at some point here soon.
Frenchie said, Seth, you're not supposed to read those damn comments. You're right.
Not from Fabletics, from J. Crew.
All right, guys. That's our take. We will see you next week on the Big Show. Patrons, we will see you Thursday at 2 and a fireside chat this Friday. Love you guys. Thanks so much for watching.